Good morning, everyone. I'd like to welcome my listeners in the United States and all around the world. I am Vince Rocco, and this is Talking New York Real Estate. At this hour, title insurance is a type of insurance that protects a property owner or lender against any potential losses or claims that may arise due to defects in the ownership of the property. Title insurance provides financial protection in case any unforeseen problems that may arise in the future. On the other hand, homeowners insurance is designed to protect the physical structure of a home as well as your personal belongings from various risks such as fire, theft, vandalism, and natural disasters. It also provides liability coverage in case someone is injured on your property and decides to sue. In New York City, both title insurance and homeowners insurance are crucial and required when buying a property. It is important to work with reputable insurance providers who can guide you through the process of obtaining both types of insurance. They will help you understand your options and find the coverage that best suits your needs and budget. As it happens, we have two of the best in our industry right here with me today. Also at this hour, attorneys in New York City play a crucial role in reviewing and drafting contracts such as purchase agreements, lease agreements, and financing documents. They ensure that the contracts comply with New York State specific laws and regulations. Attorneys conduct due diligence on the property, reviewing title records, surveys, zoning regulations, and other relevant documentation. They also consider New York-specific factors such as compliance with building codes, landmark restrictions, and other outstanding violations or liens on the property, co-op and condominium approval for board packages, negotiations and closing process, and so much more. We have an attorney expert and star in our industry with us today as well. We will have all that and so much more as Talking New York Real Estate gets underway on this Tuesday morning. In the news this morning, housing was the biggest contributor to inflation last month as the cost of housing continues to put pressure on consumer prices. The shelter component of the Consumer Price Index rose 0.6% in September from the previous month and was 7.2% higher than a year earlier. The higher prices represented more than 70% of total increases in all items outside food and energy, according to the Bureau of Labor Statistics. Suffering from a lack of supply on existing homes pushed by a surge in demand in 2020 and 2021, many Americans are now rent burdened or blocked out of the housing market. There has been improvement in other areas causing price pressure, but rental costs remain sticky. Along with rents, there was an acceleration in what economists refer to as owner's equivalent rent, an indicator that aims to measure how much a homeowner would have to pay in rent for its equal of cost of owning their own home. At $6,334, the average asking rent in Manhattan was virtually unchanged from the prior month for doorman buildings. While down from last month, the average asking rent in non-doorman buildings was 6% higher than in September 2022. Doorman buildings saw an 18% rise in listings compared to last month, while non-doorman buildings increased 41%. Studios in both doorman and non-doorman buildings saw the largest increase in new listings in September. Banning cars on blocks around holiday hotspots in Midtown last year led to an additional $3 million in spending at businesses on the pedestrianized streets, according to a new report. Mayor Eric Adams this week announced the 2023 holiday-specific Open Street program, which opened 11 blocks to pedestrians during the busiest time of the year, created more foot traffic, and led to an increase of 13.9% in transactions at local businesses along open streets. The study conducted by MasterCard found merchants on pedestrianized streets saw an average of $90,000 in additional spending per day. The success of the Car-Free Holiday Streets program laid the groundwork for permanent redesign of Fifth Avenue, and said Adams, who has selected a team for the design process. It will start immediately, and here goes more traffic in New York City. The neo-Gothic townhouse, once owned by the late fashion designer Ole Cassini, is back on the market. The five-story home at 135 East 19th Street became part of an estates battle between the daughter and widow of Ole Cassini following his death in 2006, ending only last year when it was sold in auction for just $5 million. Now, the new owners put the townhouse back on the market for $13,950,000. The quirky townhouse measures nearly 7,000 square feet and features barrel-vaulted ceilings and massive stone fireplace, stained glass windows on every floor, a glass solarium, and many more unique elements. And as summer's heat and humidity gradually give way to the cool breeze of autumn, New York City undergoes a stunning transformation. New Yorkers put away their shorts and t-shirts until next year, pull on their cozy sweaters as they venture out underneath a breathtaking canopy of red, yellow, orange, and brown. Most will find the best of fall in New York City, from corn mazes and hayrides at farms across the tri-state area to many other events at one of the city's many Oktoberfest celebrations. And after 3 long years of buying homes sight unseen, waiving due diligence, and gradually being subject to the whims of sellers, buyers again still have the upper hand in New York City's residential market. September was the best month for buyers since pandemic lockdowns hit the market back in the spring of 2020, according to a report by Urban Digs. So, what are they going to do with this new power? Not much, as I suspect, as usual. And like a celebrity couple, the vacation home market on Long Island's East End are going their separate ways. While the Hamptons is shaping up for a livelier fall, the North Fork appears to be taking a step backwards, according to Miller Samuel's recent report, that report written for Douglas Elliman. In the short term, Hamptons seems to be entering fall with a bit more momentum than the North Fork, according to its author, Jonathan Miller. All right, with me today are Berto Antunano, Executive Managing Director of Langdon Title, Andrew Lutfig, Partner, Shaves, Perlowitz and Luftig, LLP, attorneys at law, and Bradley Ziegler, Partner, Vice President of USI Insurance Services. Berto, though, I want to start with you because, title insurance is something that kind of confuses people. They don't necessarily understand it. It's a whole lot of everything, and you're going to help us through that. But what is your experience in title insurance in the specific area or jurisdiction where a New York City property is located? So is the location, different per title, or how does it work?
Yeah, I mean, every county is a little different. Essentially, the rules are the same, but in terms of how quickly we're going to get back searches and the certain recording fees. Certain recording fees are going to be different per county. Obviously, when you record a deed, a POA, a mortgage, how many pages are on it, it'll change. But essentially, title insurance is going to be the same in every county. Can
you explain the process, though, of obtaining it? Who does it benefit? Because a lot of people don't really understand that it's really on the buy side, because you want to make sure when you buy something that you're going to own title to it. And I have a cute little story. It's not so cute, but from a few years ago where the title, for whatever reason, got all messed up. And, I'll tell you about that later. But explain a little bit about the process of obtaining, working with attorneys, obtaining, title insurance, and really where the problems can arise.
Well, I'd love to hear that story after, because you should have referred me, and then it would have went smooth.
This is before I knew you, actually. This is a long time ago.
And just to be clear, it's different in different states. Florida, some counties is seller. Texas, it's the seller. But, in the Northeast, it's typically the buyer that chooses title insurance. And of course, attorneys always order, and we get referrals from brokers. Essentially what it is we're doing a 40-year abstract, right? We're checking the consecutive chain of ownership for 40 years in New York. New Jersey, it's Texas. New Jersey, it's 60 years. So it's a little
60?
different. 60-year abstract, yeah.
Okay.
And then we do a municipal search, which encompasses taxes, sewer, water, fire, C of O, open permits, violations, liens. And we put all that together. We get the searches back from the local county, and we make it into a title report, right? And it has, objections on it similar to a mortgage, right? Conditions that we have to clear, and we work with the seller's attorney, the bank's attorney, the buyer's attorney. So it's a very similar process to getting a mortgage, and once we're clear to close, then we can close.
What's the process, though? And we're going to ask Brad the same thing, but what's the underwriting process? I mean, what do the underwriters go through when they're looking at a certain property? I mean, how do they actually search for a title to make sure that it's clean, it's good, ready to go, et cetera?
Well, that's essentially our job, right?
Okay.
The underwriter's just issuing the policy on their paper, but it's our job to underwrite it and make sure that we're assessing the risk and making sure that we're not going to have any claims. I don't think we've ever paid out a claim in our existence. We've had claims, but we do a good job prior to in making sure that we're going to obviously be safe when we're clear to close.
What are the risks involved? I mean, again, there are so many things that can come up on a title that is not clean. What are the risks involved for the owner of the property and certainly for the buyer of the property?
I mean, if they don't get title insurance, because you technically don't have to,
right?
Unless you have a loan. If you have a loan, if there's financing, the lender will require that you get title insurance. But if you're going all cash, you technically don't have to, but I believe attorneys still require buyers, a lot of them, to sign a waiver saying, hey, I told you should get this.
Okay, see, that's news to me. I didn't know that. I thought that every buyer needed to go through some kind of cleansing of a title. Here's my story. So years ago, okay, 10, 15 years ago, I was selling a combination apartment in Chelsea, okay? My buyer wanted a large size apartment. So I see this listing. We go in. The owner of, let's say, apartment A, okay, bought the apartment next door, B, from an estate. Okay, the older person lived there, went into a home, passed away, whatever. And all the owner of A did was open up the wall so he can combine it, and we'll get to the actual renovation of the apartment later on, okay? But it worked out where he got job transferred and never got around to doing the renovation, so he just put the apartment on the market. So we come along, and we like the price, we like the space. My buyer didn't care about renovating. A lot of buyers, then and even now don't want to renovate. Too expensive, don't know how to do it, whatever. Right. He didn't care. Get an accepted offer, contract goes out. So I'm representing the buyer. The buyer's attorney calls me one day and says, so are you sitting down? I said, sure. What's going on?
No permit?
He says, we got a problem. I said, what's the problem? He said, well, I just got the title back. I said, okay. And here I'm trying to think about going on to the, the next thing, and I say, who cares, and whatever.
Yeah, take care.
He said, take care. Thank you. He says, so here's the problem. He said, the owner of apartment A, okay, who paid $1 million for apartment B, doesn't really own apartment B.
Holy crap! Right.
That's what I said.
Yeah.
And he's like, I said, wait a minute. Okay, what do you mean he doesn't own it? Of course he owns it. He owns both apartments. No, he doesn't. Something happened with the title.
Okay.
When he was going through the closing, and it was never filed, it was never clear. Something went wrong. It was so long ago, I don't remember the actual details. He said, so I said, but this guy paid $1 million for that apartment. What's he going to do? He said, well, that's not our problem. Have him go back to the attorney that he used to buy the apartment and close in the apartment, let them figure it out.
If he still exists.
So he says, what would you like to do? I said, run.
Yeah.
What are you going to do? Run for the hills, right?
Yeah, of course.
So I call the buyer. The buyer's like, oh, my God, what should we do? I said, run. What do you mean, what should we do?
Yeah.
It will take months and months, and I don't even know if it ever got straightened out, but months and months and months to fix that. We went and found something else. But I don't understand how at a closing, and maybe you can help me understand, at a closing, how that doesn't get processed properly, or it was not even done.
Was it never recorded? Was that simply
never recorded?
Andrew, they still technically own the property, or?
Well, listen, 99% of buyers thankfully get title insurance, like to answer your initial question.
Yeah.
There's some buyers that are like to self-insure, we call it, and open to risk, which we highly recommend they don't. Mm-hmm. But this is a classic example of why you get title insurance. Prior liens, judgments that weren't clear, where the title insurance company will do a search. So there are a few things. Most likely this person got insurance because 99% of clients do get insurance. Perhaps the title insurance company made a mistake. Perhaps, with the state, if there's a state situation, perhaps the proper documents weren't recorded. It's fortunately and unfortunately, you had a very unique situation.
Yes.
That's
Let me tell you. Let me put it this way: it was memorable because it's got to be 15 years ago. It's still on my mind, and every time I'm teaching continuing ed and something about that comes up, that's always the story I tell.
Yeah.
I remember before I was a real estate agent, and this is 21 years back, okay, when I was, kind of buying and selling apartments here in New York. I remember my attorney called me one day and said, and I was not an agent, so I didn't know anything about anything. He said, so we have a problem. Here we go again. What's the problem? He said, well, you got liens or some kind of thing on your title of your co-op. I said, I pay my bills. What kind of liens do I have? He said, you have 2 outstanding parking tickets.
Oh, yeah. They'll tack that onto your property.
Okay, what would you like me to do?
Pay them.
Get down there. He gave me the address. Get down there and pay them with fine. Don't argue.
Yeah.
Get me a receipt. Fax it to me or scan it to whatever it was, and then I can clear this because we were about to close, right? And 2 parking tickets. I'm like, okay, really? Those parking tickets probably cost me I don't know, $400 or $500.
Okay, that's fine. You closed.
It closed. What type of policies do you guys offer? Are they all the same or are they different?
No, I mean owners, lenders, and co-op. We just started doing co-op insurance policies. I know First American does an Eagle 9 is what they call it, and we started to do something similar with one of our underwriters. But 90% of the times it's an owner's policy which protects the owner against any clouds on title, paid for by the owner, and then the lender's policy which protects the lender but also paid for by the owner, or the new owner, the buyer that's coming up. And I've noticed that some attorneys, I don't know if you guys are doing the same, but some attorneys are telling me that they're starting to suggest that buyers get co-op title insurance on anything over $1 million, which is great for me because it's more business. I usually make no money on co-ops, and the insurance premiums are a lot smaller, but it'd be an interesting turn for New York for that to happen because most properties are co-ops in Manhattan.
Correct. Andrew, what is your feeling on all this? How do you approach, when you're working with a buyer on the buy side, how do you approach the whole title process? I mean, is there a streamlined approach that you go through, or is it you've got relationships with title people? How does it work?
So one important note, title insurance, unlike homeowners insurance, is a one-time fee paid at the closing. And it's regulated by the government. It's based on your purchase price and your loan amounts. So that takes a lot of the frustration out with clients because it's not like we're shopping around for rates. You're shopping around for service. Just like anything else in New York or throughout the country, you want a company that's going to be responsive and proactive, that's going to return your phone calls, going to give a high level of service, so you in turn can, or as the attorney, can be quick with your clients.
And that fee is pretty standard across the board at closing. I
Yep.
forgot what the fee is, but whatever that number is, it's pretty much standard.
Yeah.
Right.
I mean, it's going to change based off the purchase price and loan amount, but you can
Right.
ballpark it to like
Right.
$3,500 per million for the purchase price and maybe like $2,500 per million for the loan amount. But it will change as the prices get higher.
So when you encounter an issue with a title, and I'm assuming, I don't know what the percentage is on issues that you come up with for titles, but what do you do? I mean, where's your first phone call? Is it to the title people? Is it to the buyer? Is it to figuring out how do we fix this? Because I don't hear very much with title issues, but yet there are some here and there that pop up in a week, in a month, in a year.
So it's actually very interesting. Title insurance and a lien search for a co-op, they're not ordered until after we're in contract. And the contracts actually protect the buyers if there are issues that the seller can't clear. Fortunately, most of them are cleared, but we work on due diligence, right? If we're representing a seller or even a buyer, we'll go online, Department of Buildings, Department of Finance, ACRIS, different websites, and find out any information we can about maybe an open building permit. Or, usually we're more concerned with our unit that we're buying as opposed to the building. I tell clients, listen, buildings are likely to have issues. We'll analyze those as well, open permits, violations, things of that nature. But as long as the monetary, component isn't outrageous and the building's aware of it and they're taking a proactive approach, it's not going to stall the deal. Conversely, anything that's on the head or the unit, right, that's an issue. And if we're the seller, we'll call, classic story is, hey, there's an open job application from a contractor from 5 years ago, and then there's a closed one from a different contractor, and the seller says, oh yeah, I got into a fight with that contractor. They walked off the job. I'm not paying them. I said, well, we have to figure this out, right? Because the buyer is not going to take what we call subject to this issue. We have to remedy it, and you may, I don't want to spend your money for you, but now you have a buyer, especially in today's world, this slow market. It may make sense to take the path of least resistance and pay off that contractor so you can move on.
Yeah, I just did another combination. Represented the seller, and when the buyer's attorney was doing the diligence, he came up with one open permit. I mean, the renovation was done like 3 years prior, but there was just one, and it was just negligence, probably just didn't get closed for whatever reason. So my seller said, what do I do? Pay it, close it, and so he had an expediter, do the whole thing. I think it cost him $150. Which was not a bad thing, but we were able to close, and it was not an issue. Brad, on the homeowner's side, what types of coverage and options do you offer for homeowners insurance? First of all, explain to the listening audience and the viewing audience what or why it's important to have homeowners insurance.
Well, thankfully, I guess just with Berto, 90+% of people need insurance. If you're buying in cash, though, in New York, you technically do not need insurance. I've had a guy buy for $10 million and $7 million, and Tribeca did not opt for home insurance.
That's crazy.
I will never understand.
All right,
that.
but help me understand that, because even what Berto said before. I mean, so if you're paying cash, and I don't care what the purchase price is, $500,000, $10 million. Homeowners insurance is homeowners insurance. And as I said at the top of the show, it protects that homeowner or the property for that homeowner. What do they do with that insurance? Or why is it an option to not have it?
Sometimes buildings don't require it. Most do, especially like nice buildings or co-ops will require it. But a lot of the condos we see that are a few million will not have any requirements. And if you're a foreign investor, and a lot of foreigners do not find that insurance, it's usually built into their culture. Insurance, I found in Europe that especially people in Germany, for whatever reason, do not appreciate insurance, and they do not want to, like that one client buying for $17 million for those 2 apartments. He had a $250,000 watch on, did not opt to get.
And if somebody falls down in his lobby and bangs their head and he gets sued, what's he going to do?
He's out tens of millions of dollars potentially. And the water damage these days is really what we're concerned about. In those new, older apartments, it's 10 times more likely than anything else, and carriers these days are taking huge steps back in New York City because of it, and raising their rates 20 to 40+%.
I was going to ask you that, so while we're on the topic, tell us about some of the hot buttons of things that you look for or why people should have insurance. So water damage is one thing, or existing water leaks. What else?
So fire, theft, as you mentioned, vandalism, but really it's the sewer backup, water backup, or pipes bursting. And I find, for whatever reason, people leave their water running all the time, and it just seeps into an apartment. Like I had someone call me last month. They were with one of the mid-tier carriers we've all heard of, and he was struggling to find insurance because they were dropping him. And the neighbor above him left the water running, caused tremendous damage to his apartment. This was in 2020. He called me 3 years later. He still can't find a place to stay because the place is still under renovation. He's out potentially $200,000 because he, for one, did not get the right insurance with that carrier. He went with the price over the coverage, and now he's out $200,000+ plus having to pay for maintenance on that co-op and staying somewhere else in Westchester because now he can't afford the city.
I'm glad you said that many people leave water running, and here's why. Another story, okay? I just completed a renovation on a co-op that I owned on the Upper East Side. I mean, literally days before. So I come home one night and I see my super in the lobby of the building, and he's very kind of nervously shuffling and walking back and forth. He sees me. He comes running out the door, and I'm like, okay, we don't have that kind of friendly relationship. What's up? That's exactly what I said to him. He's like, well, so I was in your apartment today. I said, okay, what happened? He said, well, let me show you. So we go upstairs. I open the door. We go into my apartment, and he walks towards the bathroom. And I'm like, what could possibly have happened in the bathroom? Yeah. Well, he stepped aside. I looked at my bathroom, and the entire half of the ceiling was on the floor. Oh. Water dripping down the walls, paint peeling off the walls. Literally, days ago, the renovation was finished. I said, okay, how did this happen? Well, the man upstairs left his water running and went to work. I don't get that. How do you leave the water in the sink running?
I've probably gotten 15 calls of that this year.
But how?
Oh my God.
So of course the insurance, the guy upstairs, his insurance paid. I had to have the whole thing done all over again.
Oh my God.
Inconvenient, right?
Yeah.
How does that? How do people forget to turn the water off?
It's better than leaving the stove on.
I mean, my 90-year-old mother will forget to turn the water off, but she's 90. I mean, how do people? I don't get it.
Who knows, man? People are too busy. It's New York. That's awful.
Explain the process for a buyer that does get insurance.
That actually gets
it, needs it because the building requires it or they want it. What is the process that they go through, and what types of coverage are they looking for?
So I find with insurance, the homeowner side, we're step 11 of 12 in the process. If they're buying a co-op, they have the attorney, obviously the real estate broker. They have everything sorted out. They've pulled their hair enough. They finally get to the insurance piece, and this probably is the most seamless piece, unless they have claims. If they have water claims in particular, that can be a red flag. But normally, if it's a newer development, Street Easy saves me and the client a ton of time to look at the information. An inspection for brownstones is very helpful because those are built. It says 1899, but probably much earlier than that. So the inspection, because the plumbing can be sometimes 50+ years old, and those carriers usually don't want to insure those things. So the more information for the for the underwriting company, the better.
How do you determine the replacement value of these things? You also, I mean, how do you put a number on something that's been damaged? I mean, when we're trying to price an apartment, we use comps, okay?
Right.
Last 6 months, last 1 year, whatever. But how do you put a replacement value on damage?
So every company these days is very different with how they underwrite. So I'm a broker. I have access to 30 different companies. The mid-tier, you might see like $1 million place, they'll think it's 900 or sometimes 600,000 to rebuild. But with Chubb, if you've got they're the gold standard of the insurance market. They will find $4 million brownstones to cost $15 million to rebuild, like the total rebuild, and that is what they deem these days with how high contractors charge with inflation and with the severity of losses. So I'm having clients' prices that used to be $10,000. If they want to work with Chubb, it's sometimes $50 for a $5-6 million brownstone. So it's all over the place with what a company deems the pricing to cost. And I usually recommend if you're buying a few $1 million place, go with the premier, maybe not spend that much on the pricing for insurance, but they would rebuild with the same exact materials that you had prior. Over the mid-tier carriers, which is all the companies you see on TV, if you have anything custom, you're probably not going to get that. I usually describe to a client, they're buying a limestone brownstone. Do you want that brownstone back, or do you want an Astoria-like brick house? And Astoria is a nice area, but it's not Brooklyn or a limestone brownstone in the Upper East Side.
All right, we're going to take a break. We'll be back right after these messages. Andrew, so when purchasing real estate, it's essential to ensure that the title is clear and free from any liens, judgments, or other issues, as we discussed before. So you explained to us how you go through that. So when a title is clean and you can proceed forward, do you let the client know that? Does the client really care? I mean, what's the next step with that? I mean, agents really, we don't get involved unless there is a problem and someone calls us and says, hey, there was a problem with this. But what's the next step?
Yeah, I think what you're alluding to from a practical standpoint,
Right.
We do a lot of this homework behind the scenes. When I speak to clients initially, before I'm retained, I'll explain definitely that we're looking into title, whether it's a condo, a co-op, or a townhouse. I do say townhouses, multifamily homes are more susceptible. Not to say they will have issues, but they're more likely to have issues. You're in charge of the entire structure, including the sidewalk. But yes, a lot of the time, many clients aren't really concerned about the minutia of title insurance or lien searches. So if it's clean at the closing, they'll know about it because they're going to sign, a policy. Or get a policy, but we don't, it's a lot of the work is done behind the scenes and not getting them involved in the nitty-gritty of title insurance or a lien search.
Berto, do townhomes present more of a problem for you in title searching than anything else, or is it just pretty much standard?
I mean, putting the title report together, getting the abstract back, that part's the same, but like Andrew mentioned, there's going to be more conditions for us to clear more likely, right? Sidewalk violations, open permits happen a lot. There's plenty of homes that are, for example, act as a four-family. Someone asked me to do a search before they made an offer. It looked like a four-family, was being rented as a four-family. There was no CO that they could find on DOB because they changed it to like BizNow, and maybe not everything was transferred over. We did a C of O search, and it was a 1 to 2 family with an attached garage, which is a big difference than a four-family. So those things make a difference, but also keep in mind, we just provide that for informational purposes only. We do not insure the usage or the sidewalk, for example. We just give that information to Andrew or the buyer's attorney, and they have to deal with it.
Brad, anything special when you're looking at insuring a townhouse? I'm sure there are lots of problems because of the age of the building, but is there anything in particular that you're looking for before you actually write that policy?
It depends definitely on the rebuild. Also, I guess selfishly, it pays a lot more. If you're buying a co-op, it can be a few thousand for a $2 million co-op, while with the brownstone, it can be $10,000+ depending on that build. But really, the updates to the place, so the roof, the plumbing, the electric, if that is, I'm working with one on like Remsen Street right now in Brooklyn, and they have old Pacific boxes, and that is a big issue from an electrical standpoint, and companies don't want to insure that. So prior to closing, we have the attorney making sure the current owners are switching those out.
Andrew, so from a practice perspective, you guys handle residential, you handle commercial. What is the percentage of both, and where do you, in particular, spend most of your time? Residential side or commercial side, or both?
Sure. I run our residential department, purchase sale. We also have a residential financing department, a commercial purchase sale, leasing and finance department, estate planning, and we were with international clients. So the commercial end, I'd say, is about a third of our practice. My partner runs that department.
Why, this is always a loaded question because I'm still after 21 years trying to figure this out. Why do real estate transactions become so complex in this town? I mean, every deal is every deal. And as we say all the time, they go sideways, they go upside down, they flip all over the place. Why? What is the problem? I mean, outside of it being people-oriented and emotion, what's the problem?
That's a big factor. But I tell clients there are too many parties involved, too many moving parts. Two attorneys, two brokers, a bank. The bank has an attorney, the title company, the managing agent. So when you have 8 to 10 people involved in a single transaction, clearly there is room for miscommunication. There's room for egos.
There's that word.
Yes, big time in our and the emotional aspect of it. Of course, people don't buy and sell every day. They're nervous. A lot of fear of the unknown, and that's a big part of our job. Not only knowing the business from a technical standpoint, but also that's why you return phone calls and emails promptly to kind of curb those issues.
I teach continuing ed, and one of the classes I teach is due diligence. And one of the things I say all the time, because most people in class say to me, "Oh, no, that's the due diligence. I don't know why I have to take this class because this is really the attorney's responsibility." Wrong.
Right.
And you just said there are many people involved in the transaction. Correct. But there needs to be, because you guys do the legal stuff, we do the business stuff, and the bankers do the financial stuff, right? And we're not supposed to cross lines there. You do the insurance stuff. Yeah. So we have to be involved. But I still don't understand, and I get what you just said, but everything is always upside down. And time to close sometimes should be the priority. But yet people are like, I hear in the office sometimes, "Oh, I got an accepted offer. Vince, that deal took me 3 or 4 months to get, somebody to buy it. It's been one of those things. I'm going on vacation for a couple of weeks, and when I come back, hopefully, whatever." And I think, you're going on vacation with an accepted offer? Do you think when you come back you're going to find a deal still on the table?
Yeah.
No, you're not. Well, but that's the attorney's responsibility. No, it's not. It's yours. How complex can that be from a legal perspective, from an attorney's perspective, when you're trying to get everybody involved in the deal to march really to your orders, because you are the one driving the bus, so to speak?
Yep.
How do you do that?
I think number one is communication. We make it a point to be very transparent. When I joke around, you're doing something the way you should be doing it, you could tell the world, right? Tell the parties involved. So the brokers, for example, we let them know what we're doing every step of the way. More specifically, between accepted offer and contract signing, right? That's the critical part. We kind of know our roles, contract to closing, but returning phone calls and emails promptly. I tell clients that we're actually not going to get them involved in the minutia. We're going to do a lot of heavy lifting, and once we have some solid, concrete information for you, then we'll be in touch. Talking about real estate brokers, I tell brokers that, we take the deals very seriously. We have a lot of pride in them, of course. So we appreciate the referrals. But for you, exactly what you're alluding to, if you as a real estate broker hand off your deal to an attorney, to a banker, and take a step back, that's incredibly, dangerous, right? You want to control the deal in a positive way. You should know what's going on with your transaction every day, every step of the way. The top brokers in our city are incredibly detail-oriented. They refer us business, but it's as if they don't trust us, right? Meaning they want to control, they want to know what's going on. I have 4 kids, I joke around, it's like having a baby and, the babysitter comes and you don't tell the babysitter last time that, the baby fed or went to the bathroom. You have to be all over your transactions in a busy market or a slow market, right? You need to control it and you need to know what's going on.
We have a lot of consumers out there who listen to the show, now watch the show, and they've never been involved in a transaction before. So 2-part question. Take us through the process that an attorney goes through once there is an accepted offer and they finish working with the agent, and then talk to us about the difference between a regular market and the regular timeline to get diligence done, and hot markets where everything has to be done in 3 days?
Sure. So initially, we have an accepted offer. The brokers will send a deal sheet. That's essentially a snapshot of all the deal terms, all the parties involved. That'll kickstart our involvement on the purchase side. And on the sales side, the same idea. We work on due diligence and the contract initially. Due diligence, we want to learn about the building. You know, as they say, the good, the bad, the ugly. We don't want surprises, whether it's a condo, a co-op, or a townhouse. You know, for a condo and co-op, we review board minutes, financial statements. We actually send our own questionnaire to the third-party managing agent who runs the day-to-day operation of the building. That will typically give us the most up-to-date, accurate information. It slows down the process, which kind of we'll get to, but it's critical because many times the financials are outdated, the board minutes might not be thorough. So we need to know what's happening, you know, an assessment history over the last 5 years, increases in maintenance, you know, capital improvements, things that may affect insurance. So we gather the information, we negotiate the contract, again, subject to the client's review, and then we go through all of those documents with the client.
Are you still needing to go to the managing agent's office to read minutes, or are they now sending stuff to you since COVID? I mean, I know
Right.
it changed a little bit, but I don't know if it changed back. Are you still having to go there or not?
Most of the time, so history, you know, when I first started practicing, I would go to
Right.
every managing agent's office, you know, 9 to 10 o'clock, read board minutes for our deals. Now, since COVID, most of them, I'd say 75% of them will email. Some of them still require us to go to their office. Sometimes they'll email with signing a disclosure that we won't, email them to anybody else. The process has become a bit more streamlined. It hasn't necessarily become quicker, unfortunately. Whether it's a slow market or a busy market, things still take time. But if there's pressure, we obviously try to push.
How far back do you go in minutes? 1 year, 2 years, 3 years? Like, attorneys, bankers want to look at maybe 3 years of financials for a building
Sure.
to make sure that the building is qualified. How much are they spending? How much are they overspending or not taking enough in? How far back do you go in minutes, board minutes?
Usually 2 to 3 years. And every building is different. Some buildings are super thorough. Some buildings, there's 5 pages of minutes every month. Some buildings meet annually. Some
Yeah.
meetings, some buildings don't even meet that often. So that's why we have a lot of different areas of due diligence to get the information.
Hot markets. Okay, we all know what hot markets are about, and they can be a pain in the neck for everybody involved. And buyers sometimes are concerned that they're going to lose the property that they just got an accepted offer on because the seller says, we need to get diligence done in 3 days, or we're going to have to go and go to the backup, or go to backup number 2 or 3 or whatever. Oftentimes in hot markets, buyers jump, because they're nervous and they're emotional and a whole bunch of things happen. How do you get diligence done? I mean, if you've worked in a building before, I get it. But if you haven't worked in a building before, how do you get diligence done in, say, 2 or 3 days when the seller gives you, that mandate that says, hey, we got to get this done in a couple of days. I want that contract signed, by Wednesday.
Cookies, donuts. No. It's a challenge.
No, really. Seriously.
But in all seriousness, we will speak to the managing agent. So the managing agents really control the timing of that questionnaire. We will be transparent with the managing agent, say, listen, our firm. We work with you all the time. We don't always beg, for a quick turnaround. This deal is, incredibly sensitive. It's time sensitive. Sometimes we'll encourage our clients to offer to pay an extra fee to expedite the questionnaire. But all kidding aside,
but there are stumbling blocks, though, because getting a questionnaire from managing agent, they drag their feet. They don't care about you, me, or anybody else, right? There are all kinds of issues that can hold people back. You got to get the financials. You got to get from, the seller, and the seller says, oh, I just had a seller say to me recently, oh, I don't keep that stuff. I throw it away.
Right.
Now, by the time you go to the managing agent and say, we need the financials for X amount of years, there's going to be a cost to it. Now they start fighting, I'm not paying that. Why should I pay for that? But whatever, back and forth. So I get it. But there are time crunches that where other people are involved that we just can't get them moving fast enough.
So in that situation, sometimes
do you take the lead on that and push that?
We of course push. I'll get involved personally. We have a team, a due diligence team.
Right.
Our firm has a kind of niche where we have people that specifically work on due diligence every day, all day, so we're able to get this information quickly. But sometimes, as you're describing, there's only so much you can do. Yeah, listen, if it's highly sensitive, first of all, it's critical that the brokers let us know, right? It's not always obvious that the brokers let us know, the client lets us know. But all kidding aside, you send some bagels and cream cheese and coffee to somebody and give them a little love, right? Love goes a long way. We also try to pay an expediting fee.
You can send me bagels and cream cheese anytime.
Yes.
Absolutely no doubt about that.
To answer your question, sometimes, and as attorneys, not to sound like an attorney, but I am, sometimes clients make a business decision to waive the balance of due diligence. I tell clients, if we have 5 days, 3 days, let's see where we are after 2 days.
You're reading my mind. I was going to ask you about that. Go ahead.
And a little trick also is begging the managing agent, if they don't have time to answer your questionnaire, can you get on the phone with me for 5-10 minutes, right? Because the questionnaire will take days or weeks, not weeks, days or up to a week. But if I can get on the phone with the managing agent for 10 minutes, I can go through the big ticket items and get comfortable.
I was going to ask you about that, so thank you. The thing is, sometimes I've heard it said before, why don't we just waive the diligence and kind of just take it and say, let's run with it, be positive about it. Again, if you guys have worked in your firm, you in particular have worked in a building before, you kind of know what's going on there.
Sure.
If you're doing 3 or 4 deals in a year, how many times do you need to look at the financials, right? Unless something drastically changes, right? You kind of feel comfortable. But if you don't, what's the risk there? Because what happens if they sign that contract and then they start moving the process along and then all of a sudden something pops up and now there's a problem?
Fortunately, most buildings don't have material issues. And even if we did a deal in a building 6 months ago, there's a chance something bad happened.
Yeah.
So we have to protect ourselves. We have to protect the clients, most importantly. Most buildings don't have major issues. However, in today's market, the past month, we're seeing banks pull back loans because of issues with building,
Correct.
health and safety, what you mentioned, leaks,
Correct.
plumbing. So it's becoming a little bit more nerve-wracking, due diligence really needs to be done. Listen, a lot of clients have bought and sold in Manhattan before. They've been on boards. And I always say this is important. Risk is a relative term, right? If you say the word risk as an attorney to a client, their head goes to 10 out of 10, right?
Yeah.
Scale.
Yeah.
Usually when we describe risk on these deals, it's a 1 or 2.
Yeah.
It's not a major risk. But of course, we recommend, getting all the information. Some clients are risk adverse. Some clients can't, figure out what to wear in the morning or will take on no risk, right? So it depends on the client, depends on timing.
I always say, again, when I'm teaching due diligence, I always say it always starts with the deal sheet, okay? And how many times is the deal sheet so wrong it isn't even funny? And that's the need for, the questionnaire that the maintenance number is wrong because the agent, when they took the listing, never decided to update the incorrect number that's already in the system. Or they ask their seller, and the seller says, oh, I don't know. I mean, it comes out of my checking account every month. I have no idea what I pay for maintenance. Well, that must be nice.
That's a huge
However,
pet peeve.
go check your statement and find out what your maintenance is every month because I need to know that. If it's a condominium, what is your monthly real estate tax? Whatever. Oh, I have no idea.
Wow.
But so we go back, way back, right? When I used to
Correct.
Present with you when you were a manager. And the biggest pet peeve, one of the biggest pet peeves, you work so hard, right? You have an exclusive. You work 3 months, 6 months, a year to get a purchaser. Then you spend 5 minutes or 30 seconds putting together the deal sheet, and it's fraught with issues. Now, hopefully, your client and the purchaser use an attorney that's seasoned, that understands what they need to pull. But you may have an attorney that is based in Long Island, doesn't know what a co-op is, and then all of a sudden there are issues with the contract, and they blame the broker.
Always,
so
of course.
it's critical to spend time. And if you don't have an answer for something, put an asterisk to be confirmed by the attorneys. Right, to protect yourself.
I love it when you get a seller who says, or even a buyer who says, I'm going to use my divorce attorney in Syracuse, New York. Right. Why are you doing that? Well, because they handle my divorce really well, and I know they'll handle this closing really well. Do they know anything about co-ops in New York?
Right.
No. Do they know anything about condos in New York? No. Okay. You're not getting divorced here. You're buying a property.
Right.
And the argument sometimes with these people is unbelievable. Unbelievable.
Ask them to pronounce
Oh, well,
COP.
and a lawyer is a lawyer. I love it when I hear that. A lawyer is a lawyer.
Right.
Oh, no.
Okay.
That's a good time to get me involved, by the way, Vince. if you can introduce me directly to the buyer, I usually get 50% of those. Then you have someone in the trenches that's helping you out and will respond to your calls.
All right. Well, that's my next question to you talk to us about relationships, okay?
Very important.
And then you're next. Where do you find your clients? How do you, prospect for your clients? Is it attorney relations, other insurance people, agents? What is it?
I found my bread and butter to be real estate agents and loan officers when the rates are low, but I used to be a broker and I ran a mortgage company, and I think I understand and network better with the real estate agents because they're driving the business these days. They refer title a lot. They'll ask the attorney kindly to use them. Always appreciate Andrew because he'll always say yes because we get along great. And if I'm meeting brokers, then I can refer them to the attorneys that I work with. And I do that by, I have a continuing education school, which you keep on mentioning that you teach. Please come teach. So we do, I think, 1 or 2 classes a week. It used to be 4 to 6 pre-COVID. 50 people in a classroom every time, packed, standing room only.
Now it's all Zoom.
Now it's all Zoom.
I hate it.
I know.
I get to sit down the whole 3 hours instead of walking around and having a good time with everybody in class.
We'll do an in-person class once or twice a month.
No, we have them both. We have them in class, but there are more on Zoom than...
Oh, yeah. No, like 10 people show up to the in-person ones.
Not
the
even
same
sometimes.
10 people every
right.
time.
Exactly.
And, I've been doing this for a long time. 7 years, not the longest, but 7 years of... hustling and networking in New York quite a bit. So I've gotten to know a lot of teams and brokers. They'll invite me to broker opens, helping out with an event tomorrow, for example, in Red Hook. And when I do those, I just, I go and schmooze. I walk around, I meet agents, and then I set up one-to-ones and coffees, lunches, whatever.
You're really good at that, though. I know that. Brad, so what, how do you do this? I mean, because... First of all, trying to find business, even from an agent perspective, is not always so easy, right? It's difficult.
It's definitely not easy. And I was actually brought on 6 years ago to work with my current employees.
6 years, 7 years, and superstars. It's amazing.
Time flies. And so it's to work with our commercial employee benefits producers. And I said, screw that. I want to build my own book and I love real estate, so I was like, why not focus on nice condos, co-ops, and brownstones in the city? So exactly what Berto's looking and what he's networking and doing. So working with a lot of real estate brokers, attorneys, mortgage lenders.
Do you go to a lot of openings, like new development openings and open houses?
Yes,
is that important?
I sponsored 4 events last week for real estate brokers. I guess October, November these days, very busy. I'm on Wednesday seeing Berto at
we're doing one tomorrow.
Yes,
that's the Red Hook one.
And really, I just need to follow Berto and the successful.
Look, I've known him for a few years, and I've seen that success. Andrew, it's the same thing for you. I mean, relationship building is sometimes easy, sometimes it's very challenging. Your business is booming. Didn't you just make it to the top 4 or 5 and all of attorney firms in New York City? I forgot the number, but you're like way up there.
Number 3.
You're number 3.
Wow.
Oh, excuse me, number 3.
Congrats.
I said stars when you came in. Okay, so how do you do this? I mean, it's an ever-ending, it's the same thing for real estate agents, never-ending rather, challenge to find people who want to work with you, that are available to work with you, et cetera. How do you do this? I know you're also out there very publicly, but what do you do?
I think just consistency is half the battle, right? It's a marathon. It's not a sprint. Showing up, and offering value. When I come in and present to your company or different companies, it's not an infomercial about myself. We're trying to truly educate the real estate community, which is exciting. When over time, I think people appreciate it. People see the effort, but consistency is it's a simple concept, but it's the most difficult concept.
We're always looking for the next lead, and we're always looking for the next deal or whatever. But keeping in front of people, keeping on top of mind is not always an easy thing. We're going to take a quick break. We'll come back and we'll talk about being on top of mind for most people. We'll be right back. Okay, we're back. So, being top of mind, staying top of mind. To your context, yours. You schmooze, you go to different parties. How often do you stay top of mind with these people? Do you speak to them every day, every week? I mean, you get referrals from agents. You all do. How important is that to keep going, like on a regular basis, like every day, every couple of days?
Well, first, I think exceptional service, right, is the best way of quote unquote networking and staying in front of mind, right? Number one, it's quote unquote free, right? You don't have to. It doesn't take additional time and effort. So we pride ourselves on being accessible and responsive to our clients and the brokers, and trying really to surpass expectations. But as far as general marketing and networking, I mean, it's a multi-tier approach, right? We do newsletters. We have a social media platform. We do in-person meetings. We actually have a marketing person in-house, which is pretty unique for firm of our size and focus area. So it's definitely a committed approach. It's definitely strategic and intentional. We have, calendars. We're redoing our website. We just celebrated our 25th anniversary and had a party for it.
I was out of town, and I'm so sorry I missed that because I see so many people were there that I know.
It was
of course,
fun. It was great getting people together that haven't been around. A lot of even real estate brokers. You're running around the city, you may not see each other.
100%. Right.
So it was a great crowd. It was just fun to get everybody together.
Well, that's what I'm saying. So, when you talk about going to these open houses, to these parties for firms and stuff, you're keeping the door open. You're keeping the lead generation potentially, still flowing. You guys, the same thing. How often do you get out there and do what you need to do to keep that going? Do you work closely with agents?
We try to. That's
Yeah.
definitely
As close
the
as you
goal.
can.
And I find, at least for me, maybe not as much with Berto, but I'm definitely the most forgotten person for real estate brokers.
I'm there too.
Oh, you're not forgotten. And you're not either.
100%. I'll reach out to someone like I met last week and be like, who the hell are you? It's just the nature of the business because they think
He'll say
the
that about
attorney-
me, too, the next time he bumps into me on the street. Don't I know you?
The attorney will usually send the referral to insurance or the lender. So sometimes the quarterbacks of the transaction, the real estate broker, will not think of it. So I always try to stay top of mind.
In your mind, though, who is the most important person in that transaction?
real estate broker, because you control the entire thing. You can send the referrals to whomever.
And you agree?
These days, yes, the real estate agent or brokers is handling a lot of the transaction. Yeah, and also Andrew nailed it before, where it's service, providing value, and replying to people are the most important thing, especially in an industry like mine where the price is the same no matter where you go. The CE school helps, but Instagram has been fantastic for me. I just hired an intern who's a social media marketing. She has a bachelor's degree, but she's not touching my personal Instagram. I'm sliding into your DMs, like that's why I'm here today, all day. I'm on stories, just it's more personal, right? And then of course setting up the coffees and lunches is really nice. I connect with people in person maybe once or twice a year. That's it.
Yeah, I was going to end on the social media conversation because we try and do this every couple of weeks on the show, regardless of who's here, brokers, attorneys, whatever. Because you hit on something I think that's very dominant in our industry today. Mm-hmm. I mean, there are some platforms like, sorry, but TikTok, to me, I'm sorry.
Yeah.
What's the point?
Not really.
No. And it's really not business oriented. And if I see one more person dancing in front of me, it's kind of like, if I haven't had my cup of coffee in the morning, I don't want to see you dancing in front of me. Knock it off. Bottom line is, though, Instagram, stories, Facebook, LinkedIn, okay?
Definitely.
These are ways to get your message out there. How often do you do that? I mean, you said you started to really step it up.
I don't post as often as I should. That's why I hired this social media person. But for my stories, I post stories 2, 3, 4, 5 times a day. Just something simple. And it is very rarely is it real estate related. Right? People are doing deals.
Thank you.
People are doing deals no matter what. And I just have to be top of mind. So it'll usually be my daughter doing something weird or me out at some party or some weird Burning Man thing. And people just like the content. So
I always say, if you're going to be a poster, if you're going to be on social media in our industry, or anybody actually, but in our industry, people want to know both sides of you.
Yes.
They want to know the business side of you, and they want to know who you are.
Absolutely.
How many times do you go to a listing presentation? This happened to me in the past when my dog was still alive, and people would say to me in the middle of conversation, "Your dog is so cute.
Yeah.
You two look like you have the greatest relationship." And the first time that happened, I thought, wait a minute, how does this person know about my dog? I know it's a referral, but... And then I thought quick and said, social media, okay? That meant something to this couple, for example, because they also had a dog, right? So they kind of find that commonality, and I think social media is great. However, social media on the flip side could be a big problem. Right?
If you're posting, depending on what you're posting, sure. Especially in today's political climate, people
got to stay away from that stuff.
Yeah.
I have sometimes don't want to post, but I have no choice because of, this.
Yeah.
Because
It's good content.
my producer in London says, you got to be out there. You got to put yourself out there. I'm like, I'm already out there. Everybody knows who the hell I am. How much more could you? And sometimes it's a struggle during the day when you're trying to decide what it is you want to post about your business, about you, about both. Stories are much more looked at, I believe, than actual postings down on Instagram or Facebook, whatever. Everybody loves stories.
Yeah.
Keep it simple.
I'm like,
Don't overthink it.
Steven Spielberg, you're not. If you want to do a story, it's supposed to be a little bit of a movie, right? And here you got to chop this and chop that and whatever. I don't know. I don't get it. Okay, my thoughts of the week. When it comes to effective communication, being compelling, confident, consistent, and credible are key factors that can truly make a difference. This is my mantra, and I really live by it every day. To be compelling means to capture the attention and interest of your audience. It involves using emerging language, storytelling techniques, and persuasive arguments to make your message captivating. By incorporating personal anecdotes, powerful examples, or relevant statistics, you can make your words come alive and leave a lasting impact. Confidence plays a vital role in how your message is received. When you speak with confidence, it shows that you believe in what you are saying, which helps to build trust and credibility with your audience. Maintain a steady tone, make eye contact, and use assertive body language to exude confidence. Remember, confidence is contagious and it can inspire others to believe in your ideas or suggestions. Consistency in communication can be crucial because it establishes reliability and trustworthiness. Consistency means staying on topic, sticking to your main points, and avoiding contradictions or mixed messages. It is important to deliver your ideas or information in a coherent and structured manner, allowing your audience to easily follow and understand what you're trying to say. And being credible involves presenting accurate facts, providing relevant evidence, and demonstrating expertise in the subject matter. Avoid making unsupported claims and exaggerations as they can undermine your credibility. Instead, rely on credible sources, research, or personal experience to strengthen your arguments and gain the trust of your listeners. So, using these qualities when speaking, you can enhance your communication skills and effectively convey your message to others. Remember, practice makes perfect, so don't be afraid to step on yourself once in a blue moon, get into your comfort level, and seek the feedback and continue refining your speaking capabilities. And unfortunately, that's our Bartcast for today. Thanks for listening, thanks for watching, and thanks to my guests, Berto, Brad, and Andrew for being here with me on set. You can always follow me on Facebook, Threads, Instagram, or TikTok at Vince Rocco, or my website, thinkvince.com. And John Lennon says, life is what happens when you're busy making other plans. And to my listeners all around the world, thanks for watching, thanks for listening, and we will see you again next time. Goodbye, everybody.